Interest rates. It's the only thing the media knows how to talk about when it comes to your home loan. Now, why is that? Well, it's the only thing that Australians understand about their home loans. Anytime you hear the Reserve Bank of Australia increase or decrease interest rates, the media goes into an absolute frenzy. You hear media personalities bang on about how you'll get to save between $50 to $100 this month, all because the Reserve Bank of Australia cut rates by 0.25%. Hardly the saving that's going to put you on road to prosperity. When the Reserve Bank lowers the rates, the media will often whip up a frenzy toward first home buyers saying that they can borrow more. The flip side to this is the market is then oversaturated with first home buyers, meaning they're all competing for the same properties, making it even harder to break into the market. Not really something the media will tell you too much about. Now, don't get me wrong, I'm all about getting my clients the best possible rate. However, over the years that I've been studying finance and mortgages, I've learnt that the rate tends to be the biggest carrot the Australian public falls for. If you only focus on your rate, you're missing the bigger picture. Okay. Reasons why you might get a higher rate: you're borrowing less than 20%. However, if this gets you into the market, then I recommend going for it. Buying as an investment. Now, you might get a higher rate with an investment, however, there are many tax benefits to this, so talk to your accountant. Second tier, low doc or specialist products. To give you an idea, this might be someone who's self-employed and they might not have all of their information handy, but they need to move forward. This would be the low doc route. Things you should talk to your broker about. Should I buy as an investment or should I buy as an owner-occupier? Fixed or variable? How much deposit do I need to make this purchase happen? And discussing your future goals. This is Kim. Kim came to me looking to put her money to work. She was unsure if she should purchase as an owner-occupier or an investor. She is a first home buyer and has all the benefits attached to her first home ownership. However, after chatting to her about her living situation and her future goals, we realised that purchasing as an investor was the best option for these reasons. Kim has the option to live with her parents, minimal costs. She can borrow more. Her job requires her to be more flexible with her living situation. Although she has to pay stamp duty, incurs lender's mortgage insurance, and has a slightly higher rate because it's an investment purchase, this deal still makes perfect sense. She can claim part of her lender's mortgage insurance back on tax, and because she is purchasing as an investment, she can claim part of the interest rate back on tax as well. If she wants to own her own home in a couple of years, she can move into the investment, use equity in the investment to go and purchase an owner-occupier. As you can see, the rate barely came up in this situation. What truly matters to the client is simply getting into the market. So rather than looking for small savings on a lower interest rate, she is looking for larger savings on her tax returns and thousands in property growth. The simple way to look at it is the interest rate is no more than the cherry on the top. As a broker, I don't tend to listen to the noise outside of this office. The RBA, the Reserve Bank of Australia, can say one thing and do another. High rates should not deter you from getting into the market. If you have financial goals in mind, get in contact with the team here at Mudgeeraba today so we can structure your loan to suit your needs.